Hi, my name is Sam, and today we're going to take a look at some of the main market patterns. And why is this important to know? Well, because if you can at least identify some of the main market patterns, it will help you to enter trades better as well as exit trades better. And most of all, you will find that it will help you to not enter trades right at the moment when you should actually be exiting, or right when a whole lot of other people are exiting and it turns around and your trade that you've just entered goes bad against you. So let's take a look at what we have here. So I've given basically the official names, and these patterns are based on Elliot Wave analysis. And there's a lot of people that have got a lot of things to say about Elliot Wave analysis. But at the end of the day, it's the only thing that really has predictive power in terms of market movements. And some of the names are a little bit hard to understand, like flat, for instance. So I've given them slightly easier to remember names. I don't really care about the exact details of these waves. To me, the most important thing is that it must be easy to identify and easy to apply while you are actively trading without having to think too hard about it. And to me, that's the main thing. So that's what we are going to do here. Just look at the main patterns and main ways in which the market moves and how they move together. So you'll see, for instance, here, our first one was zigzag, very common pattern. And you'll see it basically has a sharp up move, then a sideways move, and then another similar up move. And these are often similar length, although not always. The second half is sometimes longer. On the right hand side, you have the same wave, same pattern, zigzag going down. You'll see here I indicated the short name of the particular movement. In this case, called impulsive. I just call them like a lightning bolt, there. And the flat, we'll get to that one soon, and another impulsive move. So let's move on to our second one. By the way, I'll provide this document for downloads. You can actually look at these at your leisure, keep them around, print it out, whatever you need to do. So I call this head and shoulders lightning arm. And on the left hand side, you'll see a very familiar head and shoulders type pattern that I'm sure you've seen in countless other videos. But added to it, the lightning arm, which consists of an impulsive move, and these two are zigzags. So you'll see how they move together. Zigzag and another zigzag, and then an impulsive move or a lightning bolt move. And these are corrective waves, so corrective patterns. So it's basically when the move is sideways. Here we have another head and shoulders, but with a zigzag arm. So once again, a very famous head and shoulders pattern, but slightly more aggressive correction right in the middle before it moves back up. In this case, these first waves are made out of mostly flats, followed by a zigzag pattern. So if we look at these two together, these two waves here, this one and that one, typically made out of flats. So this over here would comprise that over there, that one there would be that one over there, and then we have a zigzag at the end, one of those. Alrighty, so here's one of the ones that are quite famous, the impulsive or emotive move in Elliot Wave speak, or I just call it the lightning bolt. It's just easier to remember and look at that way. And the impulsive or lightning bolt is made out of a flat over here, or basically, remember what we said, head and shoulders and lightning arm. And or a zigzag, pretty much the same type of movement. And then the last correction in the lightning bolt move is typically a flat. And also another thing to just mention, although not depicted here, when the first correction is short and sharp, the second one's most likely going to be a bit more drawn out. And if the first one is drawn out, the second one is most likely going to be short and fast. So just things to look out for. Of particular importance with the lightning bolt move is that once you've counted 2 corrective moves like this, you should not be entering after this 5th wave completes. People often do that. They jump in right when the 5th wave has ended, and of course they regret that because immediately the market starts moving down, they get stopped out, and then of course it's part of the next wave after that, possibly up. So this is one that I've seen so many times. You know, you look at a chart and you can clearly count your 5 waves, 2 corrections, and then people say, oh, now I need to, you know, the market's really going up, I really need to buy now. It's like, no, don't do that, because you are going to lose your money. So watch out for the 5 waves. Lightning bolt move, easy to identify. If it's not easy to identify, then it's not impulsive. It's not a lightning bolt. It's simple as that. And then 2 other ones, what I call the funnel, also called the ending diagonal. Kind of difficult to count in real life on a chart, but basically you just want to draw lines, and you'll see pretty soon, you know, when it breaks out, then you know that you're at the end of the funnel. So use that. Same with the contracting triangle. No need to try and count the waves exactly. They're not perfect. Just draw your lines, and as soon as it breaks out, you know, okay, this is now done. Alright, so let's just move back up again slowly. So just once again, the most important is the lightning bolt move, and it consists of the head and shoulders and a zigzag type of move, and ending with another one down there. This is our head and shoulders and zigzag, and with a zigzag on, and this is our head and shoulders with a flat on. So now if you think about that, of course that is built in over here, so that's why you often see big moves after these corrective moves here. So let's take a look at what this looks like on an actual chart, which I think I put open here. There we go. So here we have AMD, Advanced Micro Devices stock, and this is 1 minute. So these moves that I've just shown you are basically fractal in nature. It means that they occur on all time frames, all time scales. So here we're looking at a minute, and I'm pretty sure you can identify almost right away, head and shoulders right over there. That is our starting point for our lightning bolt. There you go. And then here we have another correction. Okay, another little corrective wave there, another zigzag over there if you zoom in, and here we have another lightning bolt. Kind of wonky over there, but you get the picture. So let's just let me try and clear that out. Drawings, and let's go down to 1 second and see what happens there. Okay. So here you can see it pretty much, you know, looks the same. I mean, right here you can see a zigzag, and right here you can see a lightning bolt, and here's another one, possibly 3, 4, 5. So they keep on, they just keep on going. And once you see it, it's very hard to unsee, and that can protect you from making silly mistakes in the market. So let's remove all that, and let's go all the way up to a day. And once again, here you can see the market moves. This is probably like a zigzag right here, right? And you have a little impulsive wave or lightning bolt right inside it over there. And these patterns just keep on repeating themselves over and over and over. But they're not only in stocks, they're also in currencies, indices, and pretty much anything else as well. So here we have a zigzag immediately. You can see it over there. There's probably, if I go in lower time frame, you'll probably see a lightning bolt hidden in there. I'd say this is another zigzag right there. Over here, this is most definitely a lightning bolt, right? And here you have a bit of a messy move, 1, 2, 3 still over there. So yeah, I mean, it occurs on all time scales. It occurs pretty much everywhere you take or you care to look, and it is just something that you really need to look out for, and it just helps you to basically not get into the market when there is a clear opportunity for you to get out, and it helps you to get into the market when there really is an opportunity for you to jump in. So that's basically what I wanted to just bring home to you and to show you that these main market patterns do occur frequently in the market and do repeat over and over and over and over. And you'll often see these being referred to as different things, like I say, the head and shoulders or whatever else. And also the market entry points, you'll see people often refer to like, okay, like wait for a pullback and then you go. And it's because it's part of this this type of move. You wait for the pullback, and now you know that you're mainly looking for a three-wave move, 1, 2, 3, when you're talking about a pullback. And when you're in a run up and you can count 5 waves, 2 corrections, it's time to get out. Don't think that it's just going to keep on going up and up and up and up and up. There is going to be a pullback, and that pullback is going to be a 3-wave move, one of these. Okay, most likely, before it then continues. Of course, you can also get your funnels or contracting triangles, and they're also famous ones for breakout trades and so on. But now you know why these exist and how they fit into other patterns. So I hope that will help you in your trading, and I'll see you next time.